Hi, JJ here with The Art of Value. Welcome. Well, today I'm going to talk about Stan Druckenmiller. He recently had an interview with Bloomberg where he talked about his bullishness on AI stocks and how they've been dominating his portfolio for the last 5 or 6 months. He also talked about the hard landing recession that he still sees coming. It's been taking a while, but he still thinks it's going to happen. His predictions for that and where he thinks the economic situation is going. He's a macro investor. He hasn't had a down year in 40 years, so he's done very well. He's been right on some things, been wrong on some things, but let's see what he's got to say at the moment. Leading into his main comments about AI, he was asked if American exceptionalism is at risk. He says that America is an amazing country with an amazing system, and it's been leading in tech innovation for a long time. So since 1980, we've had the PC revolution, which led to the development of the internet, and then to cloud, and then to mobile, and now generative AI. And not to mention crypto before AI, which he says he's not sure if that was a good thing or not. He was asked about his thoughts on the current AI boom, considering he also sees a hard landing recession coming, which we'll talk about that in a minute. But he says there's always something to do in a hard landing recession. Even in the 70s, in the mid 70s, oil and chemicals boomed while there was also tough economic times going on. So he says there's always stuff to do, and he's pretty bullish on AI for the coming few years, really. He was asked if he thinks that all of AI is going to make it through this recession, if indeed there is a hard landing recession as he thinks. And somewhat predictably, he said that, of course, all of AI is not going to make it through when this kind of innovation. He said that they haven't separated the wheat from the chaff yet, meaning in periods of innovation, in tech innovation in particular, there's a lot of companies formed and that ride the hype cycle but don't make it through. So usually just a handful. But he still seems bullish on AI, even though he thinks there's a hard recession landing coming. He said that he thinks that, unlike crypto, AI is real and it could be hugely transformative like the internet, and that it's a huge thing. He argues that if staples can go up in a recession, why can't a company like Nvidia? He explains that by saying that if Nvidia's earnings go up 70% even during a recession, it's not clear to him that the stock price would actually go down, even though it is at a very lofty valuation. He says that history shows that even during a recession, if a company's earnings goes up, and it can be sustained, if they can't be sustained, then the market works that out and the price will go down. But if they can be sustained, then the company will do fine, and so will the stock price. In relation to that, in his own portfolio, he says that he has some longs, he has some shorts, and the AIs have dominated the long portfolio for about 5 or 6 months. So he must have been doing well out of that for a few months so far. Later on in the interview, he was asked if there are lessons to be learned from the Dotcom Bubble in relation to the current AI boom. Because he lost money in the Dotcom Bubble, he shorted a number of stocks and lost hundreds of millions of dollars. Those companies ended up going bankrupt later on, but timing is really difficult. So what are the lessons to be learned from the dot-com bubble? First, he says, yes, there are lessons to be learned from the dot-com bubble. Don't get emotional and don't get crazy. However, on Nvidia in particular, he says that in October it bottomed in the low 100s and it's now in nosebleed territory. What's really interesting, I think, is that he says if AI is real and it's a big thing, then you just don't have 10-month moves. He said that in the internet bubble, it lasted for 2.5 years, and for the guts of the internet, more companies than that, it lasted 4 years or more. So he said if this thing is real, it could go on for 2-3 years. He said it's not clear to him that Nvidia couldn't go on for 2 or 3 years or even more from here. He says if this is a secular move and AI is as big as he thinks it is, he said that Nvidia could go down in the short term, but he wouldn't be surprised if it goes on for that long and that it turns out to be much bigger than people realize in terms of the stock prices, let alone the industry itself. So short term it could go down, but he thinks that you want to own it for 2 to 3 years, not for 10 months, or that's his position anyway. I think it's fascinating that he's bullish on AI and pretty much nothing else right now. Later on, he was asked what he thinks the fat pitch is right now. If there is one, he's been pretty cautious on the markets. He's bullish on AI, but is there anything else that he's bullish on, or when will he be, does he think, in the future? He said that his investing record, and he hasn't had a down year in 40 years, he said that again in this interview, is as much about knowing when not to play as knowing when to play. He says he thinks that the current situation is the most complicated, non-roadmap, unanalyzable situation that he's ever seen in terms of having conviction in his predictions. And he's been pretty good at predicting. He's been wrong before, he's been right before, but as we said, he hasn't had a down year, so he's been pretty spot on in terms of his macro predictions, which is really hard to do, not for the faint of heart and the inexperienced. He says he hates to not answer the question about where there's a fat pitch, but he says he honestly doesn't see one right now. However, he does think that there'll be some really fat pitches within the next 8 to 24 months, which is quite a big time frame, but prediction is really hard. He says he doesn't want to blow all his cash right now on something that he doesn't have strong conviction in, and then later on these fat pitches open up and he doesn't have the cash to invest. He says that that would be a really bad mental state to get into. So even though he's bullish on AI, he's not much bullish on anything else. So he's got a lot of cash on the sidelines, it sounds like. So it's not to say that he's put all of his money in AI or a huge amount. He's just put some in and that he's bullish on, but mostly on the sidelines, waiting for those fat pitches that he sees coming after the hard landing recession. He actually said that he accepted the interview way back in January, and he wouldn't have accepted had he known the mental state of confusion that he is in right now, but he thought it would be rude to cancel. That's pretty funny. He also says that he hopes he's imparted some wisdom about the current situation anyway. By the way, if you're watching on YouTube and getting value out of this episode, I'd really appreciate it if you hit that like button to help spread it to more people. We've also passed well over 1,000 subscribers on YouTube and on Spotify, those two video podcasting platforms, the two main ones. So consider subscribing or following on those platforms if you haven't already and you like this kind of content. He was also asked specifically about the hard landing recession that he sees coming, and I've made previous videos where he's been talking about this for quite a while. I'll put them at the end of this video on YouTube or in the description for people on other platforms as well. They pointed out that he's explained before that he sees a tsunami coming, and they put a history of bubbles slide on the screen, which I'll include here as well. He was asked if he thinks if there are more shoes to drop. We've had a few, but he was asked if there are more to come, given that he thinks there's a hard landing recession on the way. He says yes, he does think there are more shoes to drop. That's his central case, and he explains that in the 500-year history of asset bubbles, and he thinks we've just been through one, that whenever there's been an asset bubble, there has been economic trouble to follow, and he thinks that's what's going to happen in this case too. I'd like to add here myself, from studying various asset bubbles over history, reading books about that, then there are varying degrees of economic trouble after bubbles. For instance, the global financial crisis, that was a housing bubble which has huge economic effects. But after the dot-com bubble, the recession and the economic troubles after that weren't so big because it didn't affect the whole economy. In Japan, the bubble they had there was a housing bubble and a stock market bubble at the same time, so it had a huge effect. In fact, in Japan, the stock market still hadn't really recovered after 30 years after that. So in history, there have been examples of, after asset bubbles, huge economic effects, and some not so much. It just depends how much they affect the whole economy, I think. So he thinks this one's going to have quite a big effect by the sound of it. He explains about the recent period. He says when you have 11 years of basically free money, people start doing stupid things. And he points out Dogecoin, about how it was started as a joke and it went hugely up in value. So things like that typify what happens after a period of free money. And he says it's been the most disruptive period since the 1800s, he thinks, that in terms of that kind of situation. He says that when you go from an environment where there's been the biggest asset bubble ever and you jack rates up 5% in a year, he thinks that there's a lot going on under the hood. So Silicon Valley Bank and Bed Bath & Beyond is just the tip of the iceberg. He does say there are no guarantees on that. He's been wrong a lot. He's been right sometimes, but he does think there are more shoes to drop. He was asked what he's particularly worried about, what he thinks will sink, and he says that corporate profits he could see going down 20 to 30%. But he did say that generally in a hard landing, he would say 40 to 50%. But this recession's been so anticipated that he thinks that a lot of corporations won't get caught with their pants down to the extent that they would if it was a surprise. He says that commercial real estate he thinks is going to be a problem. I think it already is to a certain extent emerging, But he said that combined with rising rates and the hard landing recession, and with the COVID changes in COVID, more people working at home, more office space not wanted, etc., that'll be a particular area that of concern. He said he's concerned about credit tightening over the next 6 to 9 months, and with the banks, the kind of problems that Silicon Valley Bank had, where the Fed convinced everyone that they were going to keep rates to zero for a long time, and then suddenly interest rates shot up. So he thinks that balance sheets of banks could have a problem. Banks in general could have a problem. We've been seeing that in regional banks so far. He thinks there could be more of that. However, he did also say that his worries and concerns are different from his predictions. And that he joked also that he's really sick of being a bear, being labeled a bear, because he's not like that all the time, but he's being particularly bearish about a hard recession coming up, when others are saying that there'll be a light recession or no recession at all, and it's been so anticipated and it's not really coming as hard landing, but he still thinks that it is. He says if there is a hard landing, that the depth of it, the extent of it, isn't changed by other people changing their positions. It still could be deep and extensive. He says that the fact that it's taking so long to get here, this hard landing recession that he sees, actually increases the probability of it happening. However, he adds that after the 1987 stock market crash, he thought there was going to be a depression. So he's been wrong before, he could be wrong it again, but that's where he sees the probabilities. When he was asked when he thinks this hard landing recession is going to start, he said he's moved around on it before, but he's sticking with the fourth quarter of 2023 at the moment. He did think that it could be sooner for a while, but he's kind of gone back to the fourth quarter of 2023. Okay, for those watching on YouTube, I'm going to put 2 previous episodes I made about Stan Druckenmiller, about his thoughts on the hard landing recession, what he's investing in. This is the first time he's talked about investing in AI, I think. I'm going to put the episodes in the description as well for those watching or listening elsewhere on Spotify or other audio platforms. And I'll see you next time. Thanks for watching or listening.